Here we learn about building blocks of insurance industry. This knowledge is very useful for all those individuals who are working on IT projects in insurance, whatever be their role, whether they are business analysts, product managers, implementers, software developers, testers, etc. So we focus on insurance industry building blocks. Starting from here, new product development. The insurance policy which you purchase is a product, and this product is typically approved by the regulatory authority or rating agency of that country. A new product may be something which may be a unique product, like, say, for example, providing covers for some unusual events like, say, cricket matches, or it could be a regular or a usual product like an automobile policy. So, time to time, insurance companies introduce new products. Next, we move on to distribution and marketing. These insurance products are to be purchased by the prospective insureds. So, how do insurance companies reach them? So, product development, distribution, and marketing. Once the product is to be utilized or purchased by the consumer or the prospective insured, underwriter or the underwriting department comes in. What does this mean? An insurance policy is always incepted or always comes into the force after a proposal being made by the prospective insured, and the underwriter evaluates the proposal. Once the policy is issued, policy has to be serviced. Maybe premium payments, maybe some endorsement or alterations, maybe settlement of claims. So new product, distribution, underwriting, policy servicing, and then claims handling and claims management. Very important activities. Then how do we manage all this? We manage all this via core systems, core policy systems like Duck Creek, Guidewire, XGen, from First Apex, etc. Analytics and AI. Today, analytics and AI has also become so important for the industry. Risk management. While we cover the risks of our insureds, the insurance company has to cover its own risks. So sometimes they reinsure, sometimes you see they limit exposure to a particular risk, etc. So that is risk management. And then finally, customer experience. The customer is paying you upfront. The customer wants not only peace of mind, the customer wants to be assured that as and when there is some financial loss on his end, it will be settled with ease. Customer experience. Moving ahead, we start with new product development. So new product development involves market research, product design, pricing, and regulatory compliance, of course. The pricing has to be competitive, there has to be demand, and whatever the product which has been introduced to the market, the regulator must approve it. Insurance products are to be approved by the regulator or are to be compliant with regulator policies, only then they can be sold to the general public. An example, so a connected car insurance, so something like utilizing the technology of telematics. So while I have purchased an automobile insurance, say hypothetically by IOIN, say Dova Insurance and Toyota, depending upon my driver experience, depending upon how I accelerate the car, depending upon how many miles I drive the car. So all this is being governed by embedded, electronics or embedded chips in the car, which is being connected via, say, internet or via satellite. So depending upon my driver behavior, depending upon other parameters, the insurance premiums may vary for the next year. This is an example of new product development. Traditional automobile insurance products never utilized telematics. Distribution and marketing. So the company has to be clear about the channels by which this product or this insurance policy has to be sold. These could be agents, these could be brokers, some digital platforms. Nowadays we purchase insurance via digital platforms also. Then bank assurance, insurance which is being sold at bank branches. Marketing campaigns, customer acquisition. So converting leads into policyholders. So this is part of the CRM. And partner management. So you see not only brokers, not only agents, there are so many, you see, individuals or so many experts which are part of your partners. So say for example, loss assessors, surveyors, these are also your partners. Underwriting. Once a proposal is made, so new product or a product, this has to be distributed. Then as the product is distributed, someone who wants to purchase your insurance will submit a proposal. Underwriter will now evaluate this proposal, evaluating the risk associated. Once the underwriter decides, the policy could be issued. So policy acceptance, policies can even be rejected. Policies can be rated up, that means issued with a higher premium. Underwriting decision can even be deferred. Then reinsurance management. So reinsurance is never done or never typically done for small individual policies. Reinsurance is being done for blocks of exposure, and reinsurers take up that risk. So those are different and specialized insurance companies who act as insurers to the insurance companies itself. So what are key underwriter responsibilities? Assessment of property risk. It could be on the basis of location, age, conditions. Determine appropriate coverages. Calculate premiums. Ensure compliance. Collaborate with agents for policy issuance. Once the policy has been issued, the policy has to be serviced. So policy servicing is also an integral part of an insurance industry operation. So a key building block of insurance value chain. Policy administration, which involves renewals, endorsements and cancellations, customer support, billing and collections. So all this is part of policy servicing. Claims. So if there is an event when the customer experiences a financial loss, insurance can cover that financial loss. So claims management involves first notice of loss. How the first notice of loss will be provided by the customer or by the insured to the insurance company. This could even be via a mobile app. Claims assessment. Once the claim has been notified, the quantum of claim has to be assessed. Claim settlement. How are we going to settle this claim? What is the procedure? What is the time involved? Fraud detection. To be a profitable company, not only an insurance company has to serve its customers, it has to detect fraud also. So there are algorithms, there are processes, there are methods to detect fraud. Technology and data analytics. All this is not possible without core systems, without data analytics, now even AI and digital transformation, utilizing automation, utilizing AI and self-service tools have also become very important for insurance industry. Then financial and risk management. Insurance companies receive upfront premiums. They provide sometimes an year's coverage or sometimes even long-term coverage depending upon the product. So premiums which are received by insurance companies are at times invested in low-risk financial products because there is premium income, then there is investment income also, risk management, and then regulatory reporting. Regulatory reporting is also very important part of insurance industry. Then finally, customer experience, whether we provide any kind of individual experience, whether there are digital platforms to engage with the customer, and then feedback and regular retention, because everyone wishes to retain good customers. And I welcome you to join our insurance domain training and our other domain training programs. We are leaders in business analysis trainings, product management and Scrum trainings, and also our domain trainings. I welcome you to join any of those programs depending upon your needs. This is your trainer and host, Vijay Shukla. Thank you.